What's up, everybody? We have a very special stream and a very special guest. If you are late on your taxes, if you have not filed your taxes and you are an American citizen, you have tax obligations. So I have someone, he's one of only a few hundred, maybe 300 enrolled IRS agents. He's a tax professional and he helps people here in the United States. His name is Josh. Josh, welcome to the stream.
Hey, thanks a lot, Nima.
Yeah, man. So, right now it's tax season. So I know this is a very busy season for you right now, and this is the busy point of the year. So thank you for joining. You're in Minnesota, right?
You betcha. Yeah, and you're in Florida?
Yeah, yeah. But
Whereabouts,
you got
whereabouts in Florida are you at?
my South Florida, Miami. You know.
Oh, okay.
Yeah,
Yeah, yeah,
you're in the Great Lakes, right?
yeah, yeah. I used to live down there, Coral Springs, West Palm, Boca.
Nice. Well, you got the nice sun, man. You got the nice snowy, nice snow to look at. In Minnesota.
No, we have this freeze thaw business going on. So now it's just crunchy snow and nothing on the sidewalk. So
All right. All right, everybody. I don't want to waste his time. He's a very busy man. And to have complete disclosure, I've actually worked with him myself. So I'm not just bringing someone who, is someone I wouldn't use. Actually, he's someone that I have, I do use. So, all right. So let's get into this. Does not like when we look at some mistakes that taxpayers make here in the United States, does not filing hurt you more than filing and owing money?
yes, for sure. So when you don't file tax returns, often there will be financial activity that the IRS is notified of. If you take money out of a retirement account, for example, or you get paid by W-2, or you get paid and somebody issues you a 1099. There's a number of different ways the IRS can find out about income or economic activity. If there's excessive economic activity on your bank account, that bank account issues a notice to the IRS, and the IRS's red flags go up. So not filing causes the IRS to do something called a substitute for return. And it's called SFR for short. And basically, all of your income is reported, none of your expenses, no standard deduction, no nothing. And they say, here you go. On top of that, there's a 20% penalty for failure to file, 0.5% failure to pay per month. So it gets ugly. And then a substantial understatement due to negligence or disregard for the law, there's another 20% penalty on top of that. So yeah, and then interest compounded daily, 8%. It's pretty much, would you go to a car loan at 13%? That's what the IRS is basically charging annually.
Yeah, that's annually. Okay. So wow, that's crazy. And then there's also penalties on top of that, right?
Well,
No?
okay, so there's the tax, and then on top of the tax are the penalties, like that 20% negligence or disregard, and the failure to file, failure to pay. And then on top of that is interest. And so according to the law, that is all tax, and the interest just keeps on compounding on top of the tax penalties and interest. And that 8% is compounded on a daily basis. And so when you do the math with the financial calculator, it gets to be about 13% for 1 year. So it doubles really fast.
So then what do people do? I mean, what does like the middle class person do when they just, get a lot of debt like this? I mean, what comes?
Well, they get letters from the IRS, and in my experience, a lot of people just shove them in the drawer or hide them or throw them away or shred them. But not paying attention gets you into more trouble than you really want to be in. The IRS has a stream of letters, so there's not really human eyes looking at your tax situation at all. The IRS computer, and there's a big computer, and then there's a number of different systems that the IRS has operating, whether the government shuts down or not, kicking out letters. And that stream of letters, just like a river, it goes in the same order. So if you're selected for an audit, a correspondence audit, you don't respond. then you're in collections. You're not doing anything with collections. Then they start getting more aggressive with their letters and the language that they use. The most egregious ones get CP 504, where they have the final notice of intent to levy and put a lien against your bank account or levy your assets.
Yeah, that's not a so do you see people losing their homes? Like if someone owns their home, will they like if a guy owns a home and he has 2 kids, will they go after his home?
So the IRS will put a lien against the property, but typically, unless you're Nicolas Cage or Rihanna, somebody of prominence and everybody pays attention to when you walk by, they're not going to make an example out of you, and they're not going to really move forward with settling their tax debt. But by putting a lien against your property, what they've just done is if they've made it impossible for you to refinance, and it's impossible for you to sell. So that gets people's attention when they're in a situation where like, we got to get out of this house, but we can't.
Yeah, I mean that's like because I mean just think about it. If a guy only makes like $50,000 a year and he owns $40,000 and it just keeps adding up, how does he get out of that?
So the IRS doesn't really publicize it, but there are programs that were initiated. The catchphrase is the Fresh Start program, and if I put fruit in the fridge 15 years ago, I wouldn't call that fresh. That's what the marketing campaign for the Fresh Start program is. But the IRS rolled out some alternatives to draconian measures where do not pass go, do not collect $200, pay us all of it, pay it now. And those programs are always out there. It's just the IRS doesn't do any like marketing follow up, telling you what's available. And when you get on the phone with them, they're there to collect income tax and penalties and interest. They're not there to educate you and help you understand what programs might be available to you and which ones you might qualify for.
Like so, I mean, I assume you've helped thousands of people over the. How long have you been doing this? Helping people with
22
the IRS?
years. 22 years. And then right here, this is the enrolled agent certificate. There's somewhere north of 60,000 enrolled agents, but the frame above that, that's the United States Tax Court Practitioner. I'm licensed to sit before the U.S. Tax Court. And yeah, there's only about 200 of us. So when you look at how far down you can go, if you're dirt broke poor, you really can't make your expenses on a monthly basis. You're falling behind on credit card payments or rent or your car payment. The IRS gets that, but you need to be able to submit financials to them. And then once they see their math, so there's a formula really that they put your numbers through. And if you qualify, you qualify. And there's, well, yeah, I got it. You can't afford to pay us right now. So we're going to put you on pause. They're going to not halt collections activity, but they're going to put that on pause. So collection activity isn't aggressive. You might get an annual letter reminding you, hey, you know what? You still owe us money. But they're not going to chase you down. They're not going to garnish your wages. They're not going to put a levy on your bank account. And they're going to put a lien on your property.
So we have a comment that someone that's joined the stream, Brianna Carter, welcome. Hope I pronounced your name correctly. She says in the comment, well, they need to go to their Congress and see whether their money is being put instead of being sent to Israel, because that's not what they signed up for. Okay, guys, let's avoid a little bit of the politics. This is sorry, Josh. We get like foreign bots on social media. They make everything about like, I don't know, Israel or like that.
And that's okay. And that's okay. And I have a soft spot in my heart for people that have the misunderstanding that Congress can do anything, because as per our U.S. Constitution, all tax legislation has to start in the House Ways and Means Committee, go through the Senate, and then get to the executive office. So congressional spending isn't going to change the fact that you're required by law, Internal Revenue Code Section 6001, you're supposed to file your taxes on an annual basis. It is a voluntary system, but there are consequences for not filing, and penalties and interest are just part of it.
So can the IRS file a return for you? And why is that usually a disaster?
So it's called a substitute for return. I went over that a little bit before. You don't get any deductions, no standard deduction, no deductions against your income. They particularly go after small businesses because your small businesses are the ones that have income coming in, and there are typically 1099s reporting that income. So when you have income coming in and you're not paying your taxes, the IRS is like, okay, well, let's pull them in for exams. So you get a letter from the IRS, or you get the substitute for return filed, and then that tax plus penalties plus interest just keeps running. But you just file a regular tax return, and that supersedes that substitute for return. That's an actual return that's followed by the law. It's worth its weight in gold because now you can take all your deductions. I help people on a routine basis reconstruct their expenses based on one of the 9 IRS approved methods of reconstructing expenses. I just a former revenue agent contacted me with an attorney. They just put a class on for Barbary, and they relied on me and my resources about how I do it. I showed them how I do it. I'm actually going to speak at a class in June on how to take care of reconstructing your expenses. So when you've got a guy who's in real estate in New York making $92,000, and I take his tax from 22,000 to 11,000, that's meaningful. But real estate agents have a very high profit margin. Take a guy in South Carolina, former military guy, and he makes $85,000. And I take his $85,000 after expenses and bring it down to $11,000. Take an anesthesiologist in Kentucky, and she makes $700,000. And after expenses, after we set up an S corporation, $710,000 to $71,000 of taxable income. That's a huge difference. So we can do a lot with reconstructing expenses. We fully disclose that on the tax return. I've never had it challenged. I've actually been in an audit situation where I've discussed the matter with a revenue agent auditing my client before I came onto the scene. Everything was golden. So it's really, really valuable to file your taxes on time. But if you don't, and they file the substitute for return, just file a regular return and take your deductions. And if you don't know how to do that, find somebody who knows how.
Okay, guys, I want to ask everyone, please keep this focused on taxes. Please focus on taxes. It's tax season. We have serious stuff to discuss. His time is, not free. Brianna, you ask, why haven't Trump submitted any tax information, tax return information, or file taxes? He's not a politician. Okay. If you have any tax questions, please ask tax questions. All right. So I'm asking politely. All right. So please, Josh, if you could, do 1099s trigger audits, or is that a myth?
So 1099s that aren't reported trigger audits. I had a couple who he took out money out of her retirement account in 14, 15, 16, 17. The IRS filed 2 substitute for returns in 14 and 16. And so we had to file an actual return to take the expenses. They had 7 rental properties. Was not an easy return, but they didn't have any expenses. And it's reasonable to assume that they wouldn't hang on to receipts or anything like that. So we reconstructed expenses for them. But yeah, if you take money out of an account or you get paid and somebody reports a 1099, the IRS has something called a differential inference function score, and they run everybody's return through that. If your expenses are way out of whack, you're gonna get pulled for an audit. So if you have $800,000 worth of expenses, no, $80,000 worth of expenses, and only $1,500 worth of income, you're going to get audited. There's other things than 1099s, but yeah, there's all kinds of stuff that will throw a red flag at the IRS to say this person might be disingenuous about reporting their income.
Jillian Goodwin, she says, welcome to the podcast. She says, I read that after 10 years, the IRS may not continue to request payments. Is this true?
Yes. So there's something called the CSAT, Collection Statute Expiration Date. And so the IRS has 10 years from the due date of the return or the date the return is filed. Hint, if you file late, that's the date the tax is assessed, the day you filed. If you file before April 15th, they're going to push it to April 15th. And then they have 10 years from that date to collect. So this is kind of the magic of filing. You're dirt broke poor. You don't have any money. You can't afford to pay the IRS, and you qualify for currently not collectible. I've got a client right now. He fully disclosed things to me, but there's his wife had some money in the 401k, so he was currently not collectible. Right now, we're not going to poke the bear. We're not going to talk to the IRS about this. We're just waiting for that 10 years to expire, and then it falls off the cliff. I've got a gentleman who signed a power of attorney yesterday. He's the guy that took all the pictures for my thumbnails. This guy is feeling great, but he wants to know how much longer does he have to wait before it's all gone. And so I help people with taking care of all kinds of things, but that 10 years applies not just for currently not collectible, but if you're in a payment plan and you're paying the IRS on an installment agreement and it gets to that 10 years from the date the return was assessed. Now, there are certain things that will pause that collection statute. For example, if you apply for an offer and compromise, that stays or presses pause. So if you have got 6 years left and you'd file an offer on compromise, it takes 10 to 14 months, and that 6 years just rolls forward. That whole period of time has to pass. And then once the decision is made, like I said, 10 to 14 months afterwards on an offer and compromise application, then the time clock starts ticking again. 2023, about 30,585 applications for offer and compromise were submitted. 41% were approved. In 2024, a 10% increase, 33,815 were applied for, 21% were approved. 50% of the ones that, yeah, so there are a lot of applications for an offer and compromise being submitted that aren't really worthy. So you got a 1 in 5 shot of getting approved. I wouldn't want to go to a big name firm. So we at my firm, and I work with former IRS revenue officers, we don't apply for an offer and compromise unless we know somebody's a good candidate. And your financials will dictate that.
The payment plan is probably the best way to go, or what do you,
Well,
for most people?
so
If they have a
there's
job, like if they have a job, you know.
so a payment plan might work out, but you might qualify as an offer and compromise candidate. So there's different criteria, and I brought up financials. So for the currently not collectible, they just look at you in terms of a profit and loss. If we can all look at this and say, we've heard the term, we're not accountants, but we get the concept of this is how much I earn, this is income, this is how much I have to pay, these are my expenses. And so the IRS has got this thing called national standards, living expenses. And so these are all taken into account. So what you think your expenses are, credit cards, oops, that's not in here. So, but if you qualify based on your income and expenses, you could get it currently not collectible. Same thing with the payment plan. And it all comes down to your income and your expenses. They don't necessarily look at, but you may have to report your assets and your liabilities. That is, this is what I own, a house. This is what I owe, a mortgage. The mortgage is higher, so I have no equity. Well, that's good. But if you have a lot of equity, that's what comes into play for an offer on compromise. They look at your balance sheet, what you own and what you owe, and your profit and loss, your income and expenses. And then there's certain criteria that nobody ever goes through. You have to file your taxes on time and not owe for 5 years after that offer is accepted. And then you have two options. Number one, you throw 20% at your offer. Your offer is like $1,000 on $52,000. You put down $200, and for the next 5 months, you pay $167.66. You've paid up your $1,000 offer, and you wait 10 to 14 months to see if it's approved, or 24 months, and you make regular payments so that by the time 24 months is up, you've paid your offer. I'm not going to divide $1,000 to 20 by 24, but those are the two ways that you qualify. But your financials that you support, provide to the IRS, have to have support, like bank statements, your pay stubs, that kind of a thing.
So you know what? So here's the thing, like, imagine you have not, okay, if you have not filed your taxes for several
Yep.
years, and then you look at these TV commercials and they say, oh, we will take your tax debt and you will only have to pay pennies on the dollar. You've worked with the IRS for 22 years. Is that true?
That is true, but what they're doing is they're selling a solution that they don't know you qualify for, that offer on compromise program. That's the pennies on the dollar. Like I said, the $1,000 offer on $52,000 worth of tax debt. And it's all part of that Fresh Start program that came out in 2011. But the reality is, you're not going to find this on any AI. They're going to say, well, they replaced that. Revenue Procedure 5-133 with the IRS. Part of the Fresh Start program says if you haven't filed for 30 years, you haven't filed for 10 years, you haven't filed for 9 years, doesn't matter. You only need to file the most recent 6 years. So we're talking about 20, 21, 22. Those have to be paper filed because 23, 24, 25 can be e-filed electronically. These have to be paper filed. These three, 20, 21, 22, have to be paper filed and take the IRS. Publicly, they say it takes them 16 weeks. Reality, at least 6 months before they process that, meaning they take a look at the returns and they put them into their system. At that point, they can work with you, but the IRS isn't going to work with you with currently not collectible, an installment agreement, or an offer on compromise unless three things are true. Number one, to the best of your knowledge, you're not being audited, and they send you some nasty grams. We've selected your 2022 return for examination. Second, you can't be processing through bankruptcy. That's an ugly word, but some people have to do it, and it's a necessary part of life. However, if you've gone through bankruptcy, you've settled that, great, but you can't just have pulled the trigger and your bankruptcy estate is not settled. Third, you need to be current. And by current, I mean you need to have filed the most recent 6 years of taxes, that's 20 through 25. And if you're self-employed, you need to have filed estimated your ES payments for the last 6 months. Right now, we're kind of in a magic period of time where it's the beginning of the year. Are you current? Well, I paid a January of this year estimate. You have all intentions of making the next 6 estimates. It might be a little while before the IRS starts talking to you, but I just sent an individual instructions through my portal how to do those estimated payments to the federal and the state governments just to show goodwill. So somebody starts taking a look at your case and like, oh, they voluntarily made estimated payments. Well, that's good. It's just getting ahead of the program that the IRS has in place. But you have to be current, or the IRS won't work with you. You have to not be going through an audit, and you cannot be processing through your bankruptcy. Those three things have to be true. and then the IRS will open the door for currently not collectible, offer uncompromised, or a payment plan. And the magic of a payment plan is doing a partial payment plan. That is, when you owe the IRS and you present your financials of income and expenses, and you're able to come up with $150 or $500 a month, and over that statute of 120 months, they're not going to get paid full what they say you owe. That's magic, because you're getting the same thing as an offer on compromise. You're paying realistically a small percentage or pennies on the dollar of what you actually owe the IRS. That's a great place to be.
So, what questions should a sophisticated, taxpayer, business owner, make? Like when they're calling these tax relief companies, for example. Like, what's a sophisticated question? Know if it's a scam or not.
What are your criteria for your designations? Typically, when you call one of those phone numbers, you're talking to a salesperson who is paid commission based on how much money they bring in on that call. So if they're quoting you $20,000 for an offer on compromise, and you know full well that you have a 1 in 5 shot, it's like, based on what criteria? If they haven't asked you any financial questions, they have no idea if you qualify. Ask them upon what basis they're making that determination. Also, what designations they have. Are they a CPA? Are they a tax attorney? Are they an enrolled agent? If they say they are, get their tax court bar number. Get their enrolled agent ID number. That's hold their toes to the fire. Make sure that you're dealing with a professional. Myself and the colleagues that I work with, I'm boots on the ground. I'm the guy that answers the phone. Hi, thanks for calling Best Tax Pro. This is Josh. Are you got an IRS problem, or are you calling to get your taxes prepared? Make it really clear right from the beginning. If you're talking to a salesperson, they're going to ask you the same question. They're not going to say, hi, how are you doing? But yeah, be prepared to ask them about their designations. You should be the one selecting them rather than them selecting you.
Yeah, so those are basically the three things to look for to avoid getting scammed on those TV infomercials, right?
You bet. Yeah. Yeah. And those Optima tax companies, they're there to make a profit. And this is America, but make sure you're getting the value for what you're paying for.
You here in the United States, you can find so many TV commercials and ads that say, "Oh, I got $50,000 of back taxes, and I settled for $5,000 or something, or we helped this client settle for free," right? But to me, and you're the one that worked with the IRS for 22 years, and you have these special designations, and you're in the trenches. To me, it just seems like, as a small business owner, I say this: if settling for pennies on the dollar was so common, like, wouldn't the approval rates actually be so much higher? Like, wouldn't literally everybody, every small business owner do that at that point? It would be like the greatest deal in the world. Just don't pay your taxes, and then you owe 300,000 in taxes. Oh, now you owe 3K.
Exactly.
Why would anybody pay
know
tax?
where I got the numbers, there's this IRS data book from 2024. You just flip to page 61. That's where I got my numbers for the number of applications that were submitted and the applications that were approved. No, not a lot are approved, and even fewer are getting approved. More are being submitted because, well, hey, the economy's not doing that bad. But if you haven't filed taxes and the IRS catches up to you, you're looking for whatever will work. If you've got some cash on the side and you throw it at a tax firm, I've talked to a number of clients who've come to me after getting burned by a big firm on the internet.
Yep.
They see it, or they see it on TV or hear it on the radio, that kind of thing. I got reviews. Check my reviews out. That's another way you can see if that's a good company. I don't know if there are too many great reviews about Optima Tax.
Josh, here's the thing. Let's say you owe $400,000 in back taxes. You haven't filed in 10 years as a small business owner here in America. And you just think to yourself, well, you know what? I looked at this TV commercial that told me I could settle my debt for basically nothing, pennies on the dollar. And yeah, maybe I will get rejected to do an offer in compromise, right? Maybe I would get rejected, but they say to themselves, "What's the downside? Like, what's the downside of this guy filing for an offer in compromise? If he just gets rejected, then he can just go to a payment plan, and at the very least, at least he went on offense, right? You
So
tell me.
let's talk about it like this. An offer in compromise is the most complicated IRS program out there. It requires the most paperwork and the most financial disclosure. Why? Because it's the fruit at the top of the tree. It's the best one. It's the one everybody wants. And if everybody qualified, yeah, that'd be great. But you're going to be out whatever you pay that company to apply. You're going to wait 10 to 14 months to find out that you got denied. Meanwhile, penalties and interest at 13% annually are accruing. So the best situation is, and by the time I'm done with the first conversation with somebody on a consult, I'm going to know the best exit strategy possible from their IRS problem. That's what I do. Other companies deal with it differently, but that person who hasn't filed for 10 years, first things first, isn't going to qualify if they haven't filed the last 6 years. So the first thing is find somebody, phase one, get your taxes filed. Once that's in, and like I said, that's going to take 6 months because you've got 20, 21, 22 that have to be paper filed. It takes 6 months to get into the IRS system. Then 23, 24, 25 e-filed. That opens on the 26th of this month, but still you got to get those other three. So let's say somebody came in today, we got 6 years of returns done, and we're going to be somewhere at the end of June before they can even qualify for an offer on compromise, a payment plan, or currently not collectible. Meanwhile, the same person goes to a big name firm who promises them pennies on the dollar, has to wait the same amount of time, and has already thrown 20,000 at a program that they're not going to get qualified for, or they don't know if they're qualified for, but somebody sold them. I don't talk like pretty talk like a salesman would to make people feel emotionally comforted by what I'm going to provide for them, but I talk plain. If it's a situation where you qualify for a payment plan and a partial pay, I mean, realistically, who could afford to pay $400,000 over their entire lives? So yeah, that's possibly currently not collectible, depending on their finances, possibly a partial pay installment agreement. Maybe, but if you're in a small business owner, chances are you're going to have some equity. Chances are you're going to have some cash laying around. So yeah, it might be a partial pay payment. It might be a full pay. Who knows? I talked to a guy down where you are. He lived on the Intercoastal at 16th floor. He owed $2.3 million. He's not going to pay that in his entire life, no matter how much he makes. But his financials are going to dictate whether he qualifies for an offer on compromise or a payment plan.
Yeah, yeah. Oh man, this. Yeah. So let's say the guy does own. Let's say so. Okay, so you have your client. He owed 2.3 million in back taxes, right? Let's say he's only making $200,000 a year. I mean, and then you get him in a payment plan. I mean, does he just run the clock out? Does he just? I mean,
And you got to keep plugging away at making the payments. So one thing the IRS hasn't done for a while, but they just in the last 12 months had a 35% reduction in staffing. So I talked to someone at the Taxpayer Advocate Service yesterday. They used to have a team of 30 people. Now they have a team of 20 people.
So is this a good point? Is this actually a good point if you owe back taxes to make a deal?
Right now is the best time, but
shout out Trump for firing these people. I hope he fires more. You know what I mean? I hope he fires all.
With this person has been at the IRS for 9 years, and she would like more people to be hired. But what we need is qualified hires. That means competent individual in accounting and knowledge and education.
Do you see?
I believe.
Go ahead, Josh. No, but good.
I believe the people that were let go, the early retirement people, were talent. And I think what we're left with is people who are recently hired. And I don't know that they have the same talent. the training program at the IRS is at least 3 years for one job. And so when you call the IRS and you talk to automated collection service, that's the phone number on those letters that go out, you're talking to somebody at a GS5 level, GS government service. That's the lowest level that the IRS hires at. That person doesn't have an ability to think things or be able to do things other than the systematic procedure that they can do things. You need to get things to appeals in order for things to happen. There are certain clients that I work with that have to do a collection due process hearing. That's an appeals thing. That's a higher level of knowledge, higher level of ability. This is a person who sits at the IRS and can, oh, okay, you've got this, and they consider the hazards of litigation rather than putting you through a questionnaire that they're reading on their computer screen. So
Yeah, that makes sense. I mean, personally, I'm in the camp of guys that you're not gonna like this, but I want to see I want to look at one day when the IRS is abolished. But I know that would destroy your business and everything you work for. That's a conflict of interest. So I'm not gonna ask you. But so let me ask you: now that President Trump has fired so many people in the IRS, if you're a small business owner, you owe $400,000, not much, but you have a tax bill. Do you think it's better right now? If you were that person, would you work on a tax debt plan with the IRS as soon as possible while Trump's in office? Or would you wait until a leftist commie like AOC is in president? Who do you think is more favorable to helping a business owner get the best deal on his back taxes right now with a tax professional like you, for example?
when I look at 13% interest and the next year that is divisible by 4 is in 2 years, you're at 13% every year. Your tax debt's not necessarily going to double by waiting, but it'll grow by 50% at least. So I would want to get my taxes filed and get into a payment plan. The IRS, if you're a small business owner, the criteria the IRS works with is not defined clearly, or as clearly as they define it is, give us your income and expenses for the most recent 3, 6, 9, or 12-month period. So you're going to want to look at your lowest performing, and that means lowest income, highest expenses, 3-month period. That's not defined as January, February, March. Maybe that's February, March, April. Or maybe that's April, May, June, July, August, September, October. So the 3, 6, 9, or 12-month period really depends on your finances. So there's quite a bit of work that you have to put into it for the numbers that you're going to present to the IRS. And then you have to support those. But if you have a lower income, higher expense ratio for a certain period of the time of the year, for example, farmers in the winter here in Minnesota, they're not making a whole lot of money in the winter unless they're doing pure dairy, right? So that's a good time of the year to take a look at, or people that do landscaping. Yes, we have snow, but you don't plow snow like 2 times a week. You don't have clients who need snow plowed 2 times a week, like when you're doing lawn care. So there's different industries.
But Josh, let's say you're me, okay? You owe $600,000 in back taxes. You're a small business owner here in the United States. President Trump just fired so many of these people in the IRS who, as you say, he actually fired the talented people, not the people who didn't know what they, right? He actually
who were at, near, or past their full retirement age for Social Security. So, we're talking about people that were boomers, okay?
Right. So after Trump did a fantastic job firing all the talented people in the IRS, okay? You've worked with the IRS for 22 years. I'm a small business owner. Let's say I owe $600,000 in back taxes. I was a bad boy. I was naughty. And I'm thinking about waiting out the clock because I think maybe the next president is easier. But then again, the next president might be a commie like AOC or Gavin Newsom. Do you think that if I have 600,000, just a yes or no question here, bro, or like a bottom line. Give me the secret here, you know?
Okay, okay.
Eh,
Let's
Hold on, hold on,
clarify.
hold on. If you owe $600,000 in back taxes, you're a small business owner right now in America. Should you get a tax plan, a settlement plan with the IRS as soon as possible? While we have Trump, who's firing all the talented people in the IRS and only hiring rookies who don't know what they're doing, and then have someone represent them, or should he wait for Gavin Newsom or AOC to get in the presidency, and then they're going to hire a bunch of IRS to enforce communism? What's the best thing for the small business owner to do? To wait for AOC, Gavin Newsom, and their communism, or do it now with Trump, where he's firing all the talented people in the IRS and it's a bunch of rookies? Who's going to give you the best deal, Trump or?
You're going to get a better deal now than later on. The reason why, because you're taking advantage of the purchasing power of your dollar today and getting into a payment plan for today. Meanwhile, your income's going to increase and your payment plan doesn't.
Yeah, but who's going to be
That's
easier
step
for
one.
who's going? Yeah, but who's the bottom line? Bottom line, you got a tax lawyer, you got a tax
You
professional
have
like you. Who's going to
you
give you the
have
best deal? Who's the small business owner a better deal? Trump or AOC and Gavin Newsom?
It has nothing to do with the cult of personality that you're quoting, people who are people. What has to do with is how many people is it taking to get your case across the finish line to get into the end zone. If there are fewer people working at the IRS, are they going to try and push this through quicker? Or if there are more people working at the IRS, is it going to slow things down? I think if you wait for the future, you're going to get a slower case. As far as the Internal Revenue Service being outlawed, I don't see it. My wife is from a foreign country that recently joined the EU in the last 10 years. And you don't want somebody else. This is America. You don't want somebody else doing your taxes for you. And that's what it would be. And then there would be something called a value added tax where every purchase, so then you're going to do your best to stay under the radar to spend money that isn't trackable. Well, yeah, good luck. I just don't see it happening.
When someone does a few tax payments, though, like when someone exchanges some money with crypto, does that generally make it harder for you, more complicated? Does that make it more expensive for the filing? Or you think I
I
just keep
just
the
I just started putting some videos out on my YouTube channel. One just dropped this morning. I'm working with a former IRS revenue officer who is the first crypto subject matter expert. Okay. There are lots of things about crypto that I don't understand, but the ones that I do is the way the IRS sees it and the way most tax attorneys see it aren't reality. But the way the IRS sees it is there's a number of different events, like when you get a soft drop or a split on your crypto, that is considered to be income, reportable on your taxes, versus buying and selling a stock. You don't have to report it unless you have a gain or a loss when you sell it. Holding on to crypto could be in itself a taxable transaction based on how crypto operates. And then let's say it's 4 years down the road and you haven't kept any of your records, but the IRS audits you. Well, there are several exchanges, cryptos that have just vanished, gone. There. So what are you going to do there?
Yeah.
You have no ability to reconstruct what you paid for it, to challenge anything with the IRS. Meanwhile, the IRS has a company called Chainalysis doing the analysis. They're the best in the industry, and you have a hard time challenging it. Now, can you? Yes, I had a guy who was audited for 2022, and the IRS fabricated 18,515 different transactions. An Excel file printed out like this thick. I had a gentleman do some work on it, and we found discrepancies via the public ledger that countered what the IRS had on their report provided by Chainalysis. It took 18 months of crickets, but the IRS finally sent me a letter saying, we've decided not to make any changes on this return. By the way, you might want to hang on to this letter. So yeah, crypto is out there. It's nasty, particularly when people get into using crypto to support their gambling habit.
That's when it gets a lot more complicated. Just in
Yeah,
general.
yeah, yeah, because you need to be able to support the amount. I'm helping a couple with a sessions method where we're reporting their amount of their earnings, their winnings that they're reported on the W2G, 500 some $1,000. And we can take losses on each one of the sessions, but I've had people who've come into my office with sessions records that were incomplete and wouldn't stand up in tax court. I've got two more recent tax court decisions that I use to base my sessions method on, because it doesn't matter what you find on the internet or what you've heard from somebody else or what the IRS has on their website. What matters is if the IRS challenges your return, you can go through audit, you can go into appeals, but if you ever have to take it even a step further and you take it to tax court, you're going to want to learn that you're going to win. So make it like bulletproof for tax court, and chances are the IRS is going to accept it.
All right. So I have a question here. Someone asked this question. They said, I'll read it here. I'm going to owe some back taxes. Can I negotiate? I need to answer some of this stuff. I'm going to owe some back taxes. Can I negotiate with the IRS on taxes and penalties that I owe them?
So penalties are one thing. Penalties, the types of penalties that you can abate are another. There's always the FTA, first time abatement. If you're current for the last 3 years of your returns, you're all filed, you just owed money. There's a possibility that you qualify for first time abatement. But if you owe back taxes from a previous year or several previous years, the failure to file and failure to pay penalties, you cannot abate. They're not included in that abatement of penalties and interest. And then negotiating with the IRS. It isn't like I just give the IRS a call and say, yeah, I'm just, just kind of want to negotiate with you. I'll throw you a number and then you throw me a number and we'll go back and forth. It doesn't work that way. The way it works is you find out if you qualify for one of the alternatives to collections, that payment plan, the currently not collectible offer on compromise, and then you put your finances together. So I get a general idea in a first conversation, and then I pull financials. Once we put financials together and we're able to support them, that's what we present to the IRS. We don't negotiate. Like I said, they have a formula that they put all the numbers through. This isn't like, let's just make a deal or negotiating and trying to convince them of something. Your numbers will convince them. Like I said, they're looking at a screen and they've got certain criteria that they have to ask. So you don't negotiate, you present financials.
Do you think that in general, when someone is having back taxes, do you notice people hiring like their wives and their family to lower their income? Is that like a lot like a legal? Yeah.
Now, if it's a family member that's going to show up on your return, like your kid who's 16, that's going to throw more red flags. But if it's your brother, I have heard certain former revenue officers say things and request things. Is there somebody that you trust who could take over that stream of income or could do those duties for you so they're earning the income? The idea is not to really fraudulently exclude yourself from income that would be considered taxable, but it's doing things in a way so that the behavior that you're illustrating to the IRS on your financials, the ways that they track you, will be clean and you'll qualify.
Yeah. So, for example, a man hiring his wife to help him, and they can have proof. They have like emails, they have conversations, there's tasks. Like it's not like she wasn't actually doing anything. No, she was actually working, but she gets paid, let's say $5,000 a month, $10,000, $20,000 a month for her job. Is that generally like not a red flag for the IRS, or or is it?
No. I mean, you can have your spouse work for you, but you're going to pay them and you're going to report that pay if you're going to take it as a deduction against your business income. So then she's going to have to report that income on her tax return, whether you file married filing joint or married filing separately. And whichever method you use, you're going to have to pay that tax.
Yeah,
So
yeah, just
that
yeah,
income
just
will get taxed. Let's go over this quickly. So if you're married filing joint, your tax brackets accelerate from the 10% to the 12% to the 22% to the 24% quicker or slower. So you're at 22,000 down here, 23,850 for the 10% bracket, 23,851 to 96,950 at the 12%, and 96,951 up to 206,700,000. So let's look at married filing separately. Much quicker, half the value, not 23, but 11,925. 11,926 up to 48,975. Remember how we were back here at 96,950? Half of that. So these are the same rates as a single person. So wherever she's at, if she does her own married filing separately, she gets a smaller deduction and she gets her income taxed at a lower rate. So if you're paying her $5,000 a month, that's $60,000 a year. She's up here in the 22% bracket. You put that on your return and you're the taxpayer who has the social security number first. Your income goes first, then hers. So you're going to pay lower tax on it, but you're going to have to pay tax on that income whether you hire your spouse or not. It reduces your business income, but that income is going to get taxed anyways. That's why when you're looking at reducing your income, if you hired or you gave the business interests up to somebody who is non-family member who's not on your tax return to take over those payments so it doesn't show up on your financial record, that's a better place to be in. But then that person who takes over is going to have to report that income.
yeah. I mean, to me, it sounds like the bottom line, to me, what it sounds like is that right now, I think the IRS is losing about $700 billion of revenue. So if you're a business owner and you're looking at the IRS as understaffed after Trump fired so many of the talented people and now has a bunch of rookies who don't know what they're doing, maybe it looks like the best chance you got as a business owner who has back taxes to settle your tax issues right now. I mean, it just seems like this is like the best point, literally do it. And Trump's only in office for, a little bit longer. So you think that's accurate? Just generally
Yep.
speaking. Is that, yeah.
Yes. That's exactly what I'm saying because I don't want to get political, but
Yeah, I know.
I just got to Google Needs. I got to take this.
No, go ahead. It's been good. Yeah,
No,
it's
this
been
is
good.
the guy that always tells me I don't have to take his calls. So it's like,
Yeah.
so what I'm saying is, if you like Pepsi or Coke, you like McDonald's or Burger King, there's a two-party system that we have here in America, and there's one party that tends to be more domestic and one that tends to be more international. You take your pick. The one that has more domestic focus will probably grow the IRS. They've done it before.
Yeah.
And if
Yeah,
you've
no,
got more people looking at records, chances are that tax gap has been there for decades. And it's not getting that much larger. It's just that, let's face it, people are figuring I can get away with taxes. There are so many more things to tax. That's why December 22nd, 2017, the Tax Cut and Jobs Act passed and the BBB passed July 4th, 2025. There's lots of things that are changing in terms of the way economic activity can take place. So the IRS and the US government wants to be in the best position to capture that because you're right. They've got about a 51% chance of you filing your taxes or not. Not everybody in America files their taxes, okay?
So is there just a big problem now with like all these people with back taxes, small business owners just not paying, and there's like the IRS is short staffed. I mean, it's just like, are people just getting away with it? Is that like, is their enforcement actually not that good because they're short staffed?
There's enforcement. It's just a matter of time and then reporting. So I've had clients who their business gets a 1099, but they don't. And they hadn't filed for 10 years and they've changed business names. So tracking that person down is a little more work for the IRS, but I think they catch up with a lot of people that typically not at the best case scenario time to, oh, I owe the IRS how much? Yeah, so it's best to get current with your taxes and get into a payment plan or qualify for one of those programs. Like this former revenue officer that I work with says, more people than not qualify for one of these alternatives than they'd ever believe. And just getting things across the finish line is what it's going to take. Just doing the paperwork and making sure that you qualify and getting it behind you so you can move on with your life rather than always looking over your shoulder if the IRS is going to catch you.
So one last question here. So aside from doing back taxes and stuff like that, do you actually just do like small business tax filings too?
Yep. I do individuals, families, small businesses. I help people with IRS audits, collections, and appeals. I go to U.S. Tax Court. So I put in 12 to 14-hour days every day of the year, Monday through Friday. I'm trying to cut it back. So we'll see what tax season looks like this year. But yeah, I don't get out of here. Well, I sent you a text last night, 7:45. I was getting out of here,
Yeah, man. Yeah. You like to go out on those lakes in Minnesota, man. I want to come out there. I love the Great Lakes region. I want to come out there, man. Hang out with you,
You bet. It'd be great. You're welcome to come. It's a great place to visit.
Everybody, I definitely respect Josh. I wouldn't say that, I don't promote stuff like that. It's rare. But Josh is someone I've trusted myself. I do trust myself, my own tax situation. Because I was let's just say a bad boy. I was a little naughty myself. And he's helping me, he's fantastic. So Josh, where could everyone find you if they're interested to to solve their back tax issue? Where could everyone find you if they have questions, if maybe it's a good match, maybe it's not,
If you're just looking at kicking the tire and looking and see what I got going on, IRS Insider Relief on YouTube. You go on Google, besttaxpro.com. There's a place to find a 15-minute consultation. I can take a look at your situation. We can have a conversation. Just grab a spot on my calendar. Or if you just want to look and see what I've got, check me out on YouTube, IRS Insider Relief.
Okay. All right. Thank you so much, Josh. I know it's busy tax season. Thank you. Thank you, everyone. Please, if you enjoyed this stream or anyone who's in a back tax issue, please share this with them so we could, maybe this is something we could help them. Maybe they find this information useful, so the government doesn't take any more money than they need to or require to. Thank you, everyone. Thank you, everyone. And then one last comment here. We have Jillian Goodwin. Thank you so much for your engagement. She says, thank you so much. Please send over a DM, Jillian. I'll get you in touch with Josh. He's fantastic. All right, everyone. Bye-bye.
Thanks, now.